A retired teacher just lost $47,000 in silver investments last month. An experienced investor made $230,000 on the same metal during the same period. The difference? 15 minutes of research that nobody talks about. What I'm about to show you could save or make you a fortune. I'm going to reveal the 3 critical factors that determine whether silver will make you wealthy or wipe out your savings, and why the next 60 days could be the most important window in decades. But first, if you want to protect your financial future, hit that subscribe button and turn on notifications. Smash the like button if you're serious about wealth building, and share this with anyone you know who's considering silver. Let's dive in. Right now, thousands of people are rushing into silver. They're hearing the buzz. Inflation hedge. Safe haven. The next big thing. And sure, silver has been used as money for over 4,000 years. But here's what the YouTube gurus and late-night infomercials won't tell you. Sarah Chen thought she was being smart. A 52-year-old teacher from Ohio, she took her entire retirement savings, money she'd been building for 30 years, and bought physical silver at $32 an ounce. The experts said it would hit $50. That was 8 weeks ago. Today, she's sitting on a 22% loss, and she can't even sell quickly because the dealer spreads are eating her alive. Meanwhile, David Rodriguez, a 38-year-old from Texas with less experience, entered the same silver market at nearly the same time. He's up $230,000, same metal, same time frame, completely different approach. What did David know that Sarah didn't? It comes down to 3 things that nobody's talking about. Let me break them down. Factor number 1, the timing trap. Silver isn't just money anymore. It's the most electrically conductive, thermally conductive, and reflective metal on Earth. Every solar panel uses it, every electric vehicle uses it, every smartphone, every computer chip, every 5G tower. Industrial demand now represents 60% of all silver consumption. And here's the kicker. We're in the middle of the largest infrastructure transformation in human history. The green energy revolution alone is projected to consume more silver in the next 10 years than was mined in the entire 20th century. But, and this is crucial, industrial demand moves in cycles. Buy at the peak of the cycle and you'll wait years to break even. Buy at the trough and you could see 200-300% gains. Factor number 2, the form factor. Sarah bought physical silver coins from a dealer. She paid a 15% premium over spot price. When she tried to sell during the dip, dealers offered her 8% below spot. That's a 23% round-trip cost before the metal even moves. David bought a combination of silver ETFs for liquidity and physical silver at the lowest premiums from online dealers who compete on price. He also allocated 30% to silver mining stocks that leverage silver's price movements. When silver moves up 10%, quality miners can move 30-40%. The difference in returns, staggering. Factor number 3, the ratio secret. For thousands of years, silver and gold have maintained a relationship. Historically, the gold to silver ratio averaged around 15:1 to 31. Right now, we're hovering around 88.1. What does this mean? It means silver is either dramatically undervalued compared to gold, or gold is overvalued. Every time this ratio has stretched above 80 in the past century, it has snapped back violently. Those who understood this made fortunes. Those who didn't, well, they became cautionary tales. Now here's the crucial update that changes everything. The reason I titled this video the way I did. 3 things have converged in the last 30 days that haven't happened simultaneously in 40 years. First, global silver mining output is declining. The top 3 silver producing countries just reported their lowest quarterly production since 2019. Mines are depleting faster than new discoveries, and it takes 10 to 15 years to bring a new silver mine online. Second, the US Federal Reserve just shifted its language on interest rates. Lower rates historically trigger massive precious metals rallies because the opportunity cost of holding non-yielding assets disappears. The smart money is already positioning. Third, and this is the big one, China just announced a 300% increase in solar panel production targets through 2026. Each panel requires silver paste that cannot be substituted. We're talking about an additional 150 million ounces of industrial demand hitting a market that's already running a deficit. The silver market has been in a supply deficit for 3 consecutive years. Inventories are at 15-year lows, and now we're about to see a demand surge that could send prices parabolic. But before you rush out and buy, hear this warning loud and clear. Silver is volatile. It can drop 30% in weeks. It can stay flat for years. It doesn't pay dividends or interest. It just sits there, hoping human fear and industrial demand drive its price higher. If you can't stomach watching your investment drop by half and holding through it, silver is not for you. If you need this money in the next year, silver is not for you. If you're putting in money you can't afford to lose, silver is absolutely not for you. This isn't financial advice. I'm not a financial advisor, and you need to do your own research and consult with a qualified professional. But if you're going to enter this market, you need to be educated, strategic, and emotionally prepared. So what should you do? If I were starting today, here's the approach I'd take. Not as advice, but as a framework for you to research. 1. Dollar cost average. Don't dump everything in at once. Spread your purchases over 3 to 6 months. This smooths out volatility and removes emotion. 2. Diversify your silver exposure. Consider 40% physical silver from reputable low-premium dealers, 30% in silver ETFs for liquidity, 30% in carefully researched silver mining companies with strong balance sheets and low production costs. 3. Understand your exit strategy before you enter. At what price will you take profits? At what price will you cut losses? Write it down. Stick to it. 4. Never invest more than 5 to 10% of your total portfolio in any single commodity, including silver. Diversification isn't sexy, but it's what keeps you solvent. 5. Stay informed. Silver moves on global macro trends, monetary policy, industrial demand, geopolitical events. If you're not willing to stay educated, hire someone who is. And here's my personal opinion on timing, backed by the data. The next 60-90 days represent either a historic buying opportunity or a trap. Remember Sarah, who panic sold at the bottom? David, he's still holding. He bought strategically and understood the cycles. The difference wasn't luck, it was knowledge. The question is, which investor will you be? If this video opened your eyes, hit that like button right now. Subscribe because I'm releasing a follow-up next week breaking down the top 5 silver miners by fundamentals. Content you won't find anywhere else. Drop a comment below. Are you buying silver, selling silver, or staying on the sidelines? I read every comment. Don't buy silver until you've done the research. But when you do buy smart. I'll see you in the next one.